Hello, this is Jack Verdul with FX Capital Online. In this video, we will learn about lot sizes and risk management. Before we go into details, we have to understand what is a pip. A pip is the unit measurement to express the change in value between two currencies. In this example here, we have micro, mini, and standard. Those simply represent the balance size required to be able to do those lot sizes. Here we have the lot sizes. We also have the dollar per pip and the amount of pips here so we could do the calculation. To find the dollar amount in pips, you simply times the dollar per pip times the total amount of pip you are looking to risk or win. From there, you will have the total amount of dollars you would either lose or win. From here, we could see at 0.10 cents, at 20 pips, we will have $2. At 40 pips, we will have $4. At 60 pips, we will have $6. Here in this example, at 0.10 cents, representing at a dollar per pip. At 20 pips, we will have $20. At 40 pips, we'll have $40. At 60 pips, we will have $60. And the standard at a 1.00 lot size is represented as $10 per pip. At 20 pips, we will have $200. At 40 pips, we will have $400. At 60 pips, we will have $600. For the first example, let's say if we have a total of $100 in our balance. Here we could tell ourselves at 0.05 lot size, which is 50 cents per pip. If I'm risking 20 pips, I could tell myself I'm willing to risk 20 pips, which is $10, negative $10, to be able to profit 60 pips, which would be $30. On a bigger balance, let's say we have $500 here. And we are looking to risk 0.40, which is represented as $4 per pip. If we are risking 20 pips, we already know we are risking negative $80. Our goal is 60 pips, so therefore we are looking to profit plus $240, which is a good risk. On a higher balance, here on the standard lot, let's say we have $5,000 in this balance. We want to risk 4.00 lot size, which would be $40 per pip. At negative 20 pips, we know we will be losing negative 800. For take profit of 60 pips, once that take profit is triggered, we will be making plus 2,400 off that balance of 5,000. Now let's take a look at the chart to see how we could use this to our advantage to be able to make profit in the market. Here, this is Euro USD H4 time frame. We notice we have an uptrend, higher high, lower high, higher high, new lower high. Price is back at support. Also, stochastic is at the bottom level. Once I zoom in, we could see exactly where we are. The overall analysis is a buy, so therefore we will be placing a buy position. For example, if I have $1,000 account, on a $1,000 account, I know I'm able to risk a certain amount to make a certain amount. So to calculate our pips, let's just take this long position here and place that exactly right on the line. Here, as you could see, once the numbers start moving in the red zone, this is the pips in that zone. So right here, we at 19. Pay attention to this number right here. Right here, we have 14, 17, 23, 29, 30. Let's just bring it to 20 even. All right here. You can see 20. So here we already have our risk, which is the stop loss of 20 pips. And we are looking forward for about 60 to 100 pips. Pay attention to this number right here on the long position. As I drag it, it will also increase. So take a look, 28, 30, 35, 40, 44, 50, 60, 70, 80, 90, 95, 100. 100 is right here at the top. As you guys can see, let's just put it at 100 flat. This simply means if I'm doing a standard lot, 1.00, which is $10 per pip, I'm saying here that I would be willing from this line, from this green line, I will be willing to lose or risk $200 to be able to make at 100 pips $1,000. So if I put a standard lot right here, it's 1.00, and I'm expecting a buy towards take profit 100 pips, and my stop loss is right underneath the green line, which is a support at 20 pips. I am risking negative $200 to be able to make positive $1,000. I can also increase my risk. Let's put it at 30 flat and keep this at 100, or let's just bring it up a little bit more to about 150. At $10 a pip, now that my risk is much bigger, $10 a pip would be 1.00 lot. At $10 a pip, meaning at 30 pips risk, I am willing to risk $300 in the market to be able to profit positive $1,500. Because our risk is 30 pips and our take profit increase 50 pips more, so we will be making on this trade $1,500 on this one trade, which is a great risk. You risk in negative 300 to be able to make $1,500 in the Forex market. That's a great risk. This goes for any balance. Refer to the previous chart that I have here, take a look at this closely just so you understand exactly how much to risk based on your account size. From there, you will be able to make better decisions on how much to risk to be able to make from a particular trade that you may take in your Forex career. Feel free to refer back to this. That's about it for lot size and risk management. Refer to the next videos for more content.